Welcome everybody to this week's episode of EfficiencyTrader.com. Hey, just going to go over a couple quick things. So we're going to be talking Forex, that's foreign currency today, and a couple things such as the risk-reward ratio, Myfxbook.com, and a couple other handy tools if you guys are looking to track your trades, really learn from your current trades, future trades, or even before you start trading. So we'll jump right into this. This is one of the accounts that I manage here. So this is up to date Wednesday, April 11th, 2018. So we'll start out right here. So Efficiency Trader is the name of this one. Basically, guys, if you go to myfxbook.com, you'll be able to create a account that's going to let you track all of your trades. So it syncs with MetaTrader, anything in the MetaTrader 4, and I believe anything in the MetaTrader 5 platform. So I currently use MetaTrader 4. This is going to be with an account that I manage through Awanda. So if you guys have questions about that, put it in the comments, message me, jump on EfficiencyTrader.com and book a free 15-minute session where I will coach you and walk you through any questions that you have for absolutely no cost. So jumping in here, this is going to be one of my bigger accounts that I manage. So starting kind of just top to bottom, left to right, we'll go over everything here. So year-to-date gain, we're actually down on this account. It's negative 9%. So one thing that I talk about in a lot of my previous videos is typically I would never trust somebody that doesn't show you their trade history. There's a lot of scams out there that say, hey, I've made X number of dollars, but there's really no way to verify this. So this isn't necessarily a third-party verification, since obviously this is something that I created through myfxbook.com and am showing you guys, but it would be very simple to verify any of the trades that I have here by a third party. So those are some things to look into. There's a lot of scams out there promising to get you to be a very profitable trader, and I'm going to kind of take that argument and elaborate on it, because profitability is not necessarily just the amount of trades that you win. I'll show you in a minute that I have a 94% winning percentage, and I'm still negative 9% for the year to date on this. So jumping over here, the absolute gain, so it's at negative 6%. That means I've been losing money lately on this account. Shows you your daily, monthly, and your drawdown. If you guys are ever looking into investment products, auto traders, mirror traders, there's a couple platforms out there that are called the Fusion Trader. Basically, these are programs that copy whatever a real person or an algorithm trader is doing, and then it's simply going to copy and paste that trade into your Forex account. So Forex, brief overview, if you're just getting into this for the very first time, Forex is foreign currency. It's based on the exchange rate of what currencies are being exchanged for. So say if I'm in America and I travel to Europe and I exchange the US dollar for the euro, there's going to be an exchange rate. So whatever that cost at that time, that's what we're basically betting against here with foreign currency. So it's a very, very volatile market, as you can tell. But basically what that means is if you bet in the right direction, you're going to make money. If you bet in the wrong direction, you're going to lose a lot of money. So there's definitely some strategies, which again I mentioned. We'll talk about the risk-reward ratio and what that looks like. But right now we'll just talk about this account. So basically the numbers, we started with about $20,000. We're down to about $18,400. This is a real money account. I'm sure it might say it somewhere on here, but I'm not going to show off too much of my personal information on this account, so I'm not going to scroll up for you guys. But basically, there's traders out there. If you're ever looking at a mirror trader or an auto trader, somebody that trades for you, there's a lot of, I wouldn't say scams, but I've talked about having skin in the game as a trader. If they're trading with fake money or a demo account, they can still sync those accounts to yours and get those trades copied or mirrored into your account. So really the mirror trader that's using a demo account, there's absolutely no risk to them. If they lose, let's say $1,000 in a couple of minutes, that means you lose $1,000 in a couple of minutes, except they really didn't lose any money since it was a demo account. So if we're using a real money trader, that's one thing to see is skin in the game as far as, hey, they're using real money. If they lose, they're actually losing money, which means if I'm following them, if I'm getting trades copied to my account, that means I'm losing money. But that motivates real money traders to actually make a profit because they're not just out there experimenting. They're not out there trying out algorithms or trying new strategies with a demo account. They're using real money. So that's kind of the quick overview I wanted to talk about here. This platform is awesome, myfxbook.com. Here's the chart. So basically, open this account around September 14th. Guessing that's actually accurate. I couldn't tell you when I started trading in this account, but sometime in 2017. So basically you can see just the overall chart of growth here. You know, we've had our ups, our downs, and mostly downs, and then almost break evens, and then a couple deposits and withdrawals. So that's where you'll see some of the big stuff. Just the way to read the chart, it's very simple once you realize what the terms are. So equity growth, that's going to be the yellow line. Growth, that's going to be the red line. We'll talk more about what those are in a different video at a different time. So I'm going to click on the next one. It's going to be balance. So this is going to be the balance of the account. So yeah, about September 14th, I was trading this account and then deposited a bunch of money. No, I didn't make 15 grand overnight. So that's all deposits. Right about here is where I started doing some what I would call actual trading on this account. Before that is kind of just a couple trades to get my bearings, make sure my strategy was working before I added more money. So basically here started with about 19,858 in October. Then the balance just kind of goes up, down, got all the way up to 20,008, higher 800s, and then down. Recent trades here, we're currently at about 18,400. So this is an Awanda account. So it's U.S. regulated. It's non-hedging. So it's FIFO compatible. If you guys know any of those terms, if not, it's not a big deal. Just for this video, I want to show you what Myfxbook looks like. It's a free tool, so you can chart all of your trades, your trade history, and really be able to research and analyze what went right and what went wrong in your trades. So I'm going to click on profit. This one's going to be a little bit more important, especially if you're looking to follow somebody for a potential mirror trade. If you want to follow somebody, MetaTrader 4 has an account. I actually have a link at some point I'll put up, but you could actually follow me to manage your money. So again, this is where you can see, all right, there's ups, there's downs, all of that. So as far as the profit, it's going to be outlined in the red. So anytime there's a big loss, the red goes down. So pretty simple as far as that. One thing I will urge you to look at if you're ever looking at a mirror trader or an auto trader is the drawdown. So based on some brokerages, they will actually close out any open trades depending on how much drawdown you're doing. So drawdown is, on this screen we're looking at, it's done in a percentage format. Depending on your leverage, so this is going back to your broker and your settings when you open your account, the leverage. So as mentioning, Awanda is FIFO compatible. That means I believe you can only get up to a 50-to-1 leverage margin account. So get very familiar with that before you start trading. If you don't know the difference between leverage and margin and drawdown and what really the fine print is, that could be a big chance to lose money. I'll be totally candid. One of my very first trades, I was following a mirror trader, had about 10 trades open, and I was in a leveraged account. So that means I was basically borrowing more money than I had in the account. And once you hit X percentage of the drawdown, they will close out all of your open trades. So I ended up losing quite a bit of money because those open trades could have gone for a profit, but since they didn't right away and they were open at it's called a margin call. Once they were open at the margin call, and excuse me, once they were open at the margin call for longer than the time specified, all those trades got closed out right there. So they ended up being whatever they were at the time. So if it was a profit, it was a profit. If it was a loss, it got closed out, whatever it was at. So that's why I show off drawdown. You always want to check with any broker. Make sure you know what that is, what your level is for that, and then also if you're looking to get a mirror trader, what their average drawdown is, what their highs are, what their lows are. So with mine, I'm more of a scalp trader recently on this account. So my drawdown, I'm making statistically smaller trades, which for me, this is kind of a big trade. Most professionals will say, you know, maybe risk 1 to 2% of your account balance at a time. Basically, I've risked about 12% is one of my highs here. So that could be a big loss, could be a big reward, but really I'll get into that here in a minute with the risk-reward ratio. Really, you want at least a 2 to 1 risk-reward, which basically says, hey, if I risk $1 and I lose the trade, I lose $1. If I risk $1 and I win the trade, I'm going to make at least $2. That way, we only have to win half of our trades, 50% of our trades to break even. So I've seen a lot of ads on Facebook, especially in the options world. If you're doing stocks and looking to get a stock screener or a strategy within stock options, they'll boast and brag, oh, we've got a 90% win rate. So I will show you with this account right here why a win rate or a win percentage is not the bottom line. Again, I mentioned I have a 94% win rate currently on this account, yet I have lost overall about $1,200. So if you want to have a high win percentage but lose money, don't pay attention to the risk-reward ratio. So this is why it's very important. I could be at a 50% win ratio, or excuse me, yeah, win percentage, and have a good profit to loss ratio and still be in the positive. So I'll kind of explain that here a little bit more. Just scrolling down, there's a couple other things you can look at. Trading periods, goals. I like that because you can set daily goals, weekly goals, monthly goals. Again, especially when trading, you want to set goals and measure them. Whether you achieve them or not, you can learn from anything as far as trades. That's why every single stock, Forex, anything, futures contracts, they have charts that show past historical data. Basically, if you can plot on a graph when you made that trade and when you got out of it, you can see what else was going on based on your strategy and learn from it. So for me, I don't consider any loss a true loss if I have learned from it. If I don't take the time to track my trade, track my position, track what strategy I was using, then that absolutely is a loss. But to me, a lot of these losses, they are sometimes expensive lessons. But again, with a $1,200 lesson, I mean, there are training courses out there online. I'm not going to rag on anybody specific, but most of the training courses I've seen range between $1,000 and $7,000. So you could go through training and still have spent that much money, or do what I've done, do hands-on experience, and lose about the smaller end of how much some of these educational traders trainings are going for. So that's just personal preference. If they're tried and true and they have good reviews, they use real money, they're doing things the right way and have good reviews, absolutely that's going to be your choice if you want to go with them, or maybe take different classes before you jump in. Either way, I always suggest trading with paper money or a demo account first. That way you're not risking and losing money when sometimes people, when they're first starting out, will click buy when they meant sell or sell when they meant buy. So those little things, make sure you're fully confident before trading with a live account. So as far as that, this is the part that I wanted to show you guys. As far as the advanced statistics here towards the middle bottom, I'll scroll down for you. So in this account, I've made 263 trades. It shows your profitability, so pretty much I've lost 14 trades out of 263. So that means those 14 trades that I lost on, I lost a lot more money than I made. So that's where I look back at my trading history. All right, well, why am I losing money in my account? I'm 94% right when I do bet on the market. Why am I losing money? So for me, I do something which most traders say not to do. They say to make sure you have a stop loss. I always avoid a stop loss because I get stopped out more than I am successful. So an ego thing in me says, all right, well, I was at a 97% win rate, yet still lost about $2,000 at the time. I've made some of that money back, about $800 back since then. So again, the win percentage does not mean anything. So I'll show you right here, my average win, I'm making about $12.65 per trade. So again, if my loss here, I average $315 a loss each trade. So yeah, let's times 14 by 315. That's how much money I have lost just since September, October, whenever this account got opened. So yeah, 263 trades. Not all of those were winners, but the winners were very small and the losers were very big. That's how you end up getting a negative account balance or lose money. Warren Buffett always says, never lose money. The first rule of trading is to never lose money. So here's a great example. Guys, I'm not going to say that I'm a millionaire. I'm not going to say that I know it all. Basically, I want to share with you what not to do when trading foreign currency, what not to do when looking for education out there. So that would be my advice for these. You can kind of see all of this. I try to avoid accounts that charge commission. Basically what my plan is from this point is to only make trades that have a 2-to-1 or better risk-reward ratio. So I will pull that up here in just a second of what I mean by that. But basically, again, for every dollar that I risk, I want to have a chance of making $2 back. So just like blackjack, you can find more information about some those gambling games and how to make money on those at EfficiencyTrader.com. I've made a couple videos on that. But basically, how that works, same thing. That's going to be a 3-to-1 ratio in blackjack. So for every blackjack that I get, I'm getting 3 times the money versus just the one time when I lose it. So really here, just flying through this. Again, I'm very balanced as far as my long and short trades, so buying and selling foreign currency. You can see the percentages there, both at 94. Best trade, this is in pips, so let's see, actually, that is in dollars, so $146 is the best trade. The worst trade, guys, if you take a look at this, this is why we don't jump in without a plan and why we follow the risk-reward ratio. So if you lose $1,600 in one day, are you comfortable doing that? Most people are going to say, hell no, I'm not going to risk that much. I'm not an idiot. Trust me, I had all my safeguards in place, but basically when you click get rid of that stop loss and then it goes south from there, you're forced to either wait 6 months until this goes positive and you're getting charged the daily swap every day until then, or you can close out the trade and win some of that money back. So luckily I have been able to win a good chunk of that money back, but obviously you can see right there, one trade, $1,600 down the drain. So a lot of people don't have the patience or the stomach to see their account go negative, but basically if I was going to get into that trade again, I want to make at least double that or have the potential to make double of that. So based on my trading strategy, I'll show you guys here in a second of, hey, if the market's going one way, I'm going to capitalize here. If it's going the other way, I'm going to get my stop loss set, get out. It's obviously not going the direction I want it. So that's pretty much the quick overview of Myfxbook.com. Shows your average length. I try to get in and out. However, this one trade, I believe it took me several weeks to get out of. So typically I try to make 3 trades a day. This one made that average go way up, and it was about a day for just one trade. So as a day trader, as a scalper, that's basically time and money not properly invested. So learn what style you want to do. If you want to be a scalper, that means you're basically making several trades throughout the day. A day trader is doing a couple trades a day or throughout multiple days, and then a swing trader is going to be a longer version of the day trader where they're going a couple days, or an intraday trader where you're going multiple days in a week. or lastly, a buy and hold trader who's going for the long term, weeks, months, years on a certain trade. So as far as that, if you guys aren't sure what the z-score probability is, the expectancy, all of those, these are good things to Google. They have a quick, if you hover your mouse over them, they'll show you what all of these are. But basically, if I had any trades open, I just closed out a trade last night. Again, a lot of day trading for me means night trading because the London session here in Colorado starts about midnight. So if I randomly wake up, I think I made a trade last night at like 2 in the morning, made $30. So it's one of those things, have a game plan, all that fun stuff. But here you can kind of see the month ROI. So some of these cancel each other out. So overall, you can see a lot of information, but being able to put that to a plan, keep yourself accountable, and make sure you're learning from each of these. So history, so here's that one last night. Just a couple pips here, so about $30. Basically that trade took me 4 minutes to make $30. So I'd love to say that that happens all the time, but you can see a lot of these trades are a couple hours before they get executed or before you get stocked out. So luckily there's a couple of good trades in there, but again, once you take a big loss, it takes a long time to come back from to break even. So the stop loss is definitely something you want to really come up with a formula and a plan for. So that's the quick overview of myfxbook.com. There's a couple other things, the hourly, all the summary of all of my trades. You can break it down by what currency pair I'm most profitable with, or in your case, if you make an account, which one you're most profitable with. So, all right, well, there's, one currency pair that I'm 100% on, but I've only traded it twice. So there's just a lot of things to look at as far as statistics. Some are more volatile, they follow my trading plan, but this is a way for me to see, hey, this is what's working, here's what's not working. And then obviously there's things called black swans, sometimes things that are unpredictable that we've never seen before. Quick story about black swans, up until relatively recent, I'd say in the last 100 years, everybody has only seen a white swan, a swan that's white in color, until somebody went to Australia and saw the very first black swan, a swan that's black in color. So up until that point, everybody thought all swans were white until one event changed that perspective. Same with these trades. Every trade can be a winner until it's a loser. So there's always that. Don't let yourself bias yourself. All right, I'm going to jump over to tradingview.com and show you guys a little bit more about the risk-reward ratio. So I'll just jump over one of my favorite stocks. We're jumping over to stocks here just because it was the quickest one for me to think of. So really break this down really quick here. All right, so this is for Grand Canyon University. Their stock ticker is LOPE. I'm going to just jump to the 1 hour time frame and show you guys a little bit about what I'm talking about. So for example, again, not going to solicit any advice. I'm not a licensed financial professional. I'm not here to give you advice. More so, I'm just going to educate you. As far as a mere trader or a copy and paste trader into your account that follows the FINRA laws as long as you agree to those terms. So again, you will have to know that inherent risk if you ever decided to follow a mere or copy trader. So jumping in here really quick, guys. So it looks like we've got some levels right here. So the 107.31 mark. So if you can see where my mouse is, here's where we're currently at. We've got some green candles. If we jump back over here, you can see this is either a supply and demand level, support and resistant level, but you can see where once price hits here, it goes down. Once price hits here, it goes down. Price hits here again. So for myself, I do several things as far as looking at trades. You're going to look at this, be super confused, even if you're an expert at stocks, trading, Forex, all of that. But I've got all these lines. I know what they mean. I don't want to confuse you, so I'm going to just keep it very simple without changing my settings here. But basically, if I'm making this trade, so we're over here at tradingview.com. There's some very good tools on the side here. You can really measure your risk-reward ratio. So if you wanted to do the long position, hey, here's what I think it's going to be, the short position. You can click all those tools and add them on there. Just for this video, I'm just going to use a little measuring tool. Basically, I'm going to say, hey, if I was going to get into this trade, let's try to make this randomly pretty easy. So basically, the measuring tool is awesome. As far as going up or down, it will show you how many bars, what the since it's a stock, it's showing dollars here. So if I went down from here, it was -$2 or negative 1.9%. Let me see if I can scroll over, get this in a better position just to show you guys how this tool works. But basically, it's going to show all these different numbers. So again, you just click and drag either up or down, and it shows, hey, if I think the market's going here, that's going to be a 1% gain, or it's going to be a 3 or 4% loss. So that's a quick way to do it. Again, previously with what I just showed you on Myfxbook, I haven't followed a strict risk-reward ratio. That's one of my weaknesses that I'm going to improve on. So if I'm looking for a risk-reward ratio, let's just do 1% for 2%. So let's put $108.60. That's for me if I was going to take this trade. Again, I haven't looked at my indicators. I'm just trying to make a quick video here, but just show you guys, hey, this would be a 1% loss if I put my stop loss at $108.60. But if I went down to a 2% gain, so this would be a short position, I would enter the trade where we're currently at and sell, or in this case, buy back, since it's a short, at 2%, so a 2% gain. So basically that's, I believe, what this tool was. So there is the risk-reward calculator, or the profit-loss calculator here. So I previously had this on to show, hey, it was a long position I was trying to buy, and basically if it fell into the red, that's my stop loss. If it fell into the green, that's my take profit. So you're always going to want to make your stop loss half of what your take profit is. If this thing, for example, let me get this out of here. If we were going down, like I was saying a second ago, if we wanted a 2%, negative 2% gain. So right here, basically, if the market kept going down, I would make this negative 2% mark, that $105-ish, my new stop loss. That way, if the market fell all the way down here, shoot, we could get a 7% gain, whatever. And then if the market changed directions, we're still at a guaranteed 2% gain. So that's how you can make some of these bigger positions run longer. But like I was saying again, basically have a plan going in there. Never risk more than half of what you're willing to gain. Same thing is true if you're looking to make $2, only risk $1. That way, if the trade loses, cool, you lost $1. If it wins, you make $2. That way, you don't have to beat yourself up of trying to be perfect. Nobody's perfect. Guys, again, I showed that a 94% win ratio, win percentage, is still a losing account. So if you can shoot for that 60 or 70% win percentage and trade with a 2-to-1 risk-reward ratio, you will definitely have more money in your account than I currently have. So that's just my quick tips here. Again, Wade with EfficiencyTrader.com. Check us out online at EfficiencyTrader.com. There's education, the Robinhood app, now that there's shorts, options, all that. Blackjack, will be adding more in the foreign currency market, and really made it super simple. If you just click right there on the home page, here's where you can book a 15-minute coaching session. I'm all about efficiency. I'm not here to give you advice. I'm here to help educate you, help you answer your own questions, and become a successful trader. All right, guys, have a good one.